Hello, this is Patrick White from AA Commodities and Investments with your Monday, August 12th market recap here. I decided to do a market recap here after the WASDE report. We had a pretty good sized reaction here to the report today. We ended up having Dees corn down 25 cents here at 3.92 3/4. November beans finished the day down 12.5 cents at 8.79 1/4, and wheat closed the day down 27 3/4 cents in the September Chicago contract at 4.71 3/4. I'm going to go ahead and get it started off here with a disclaimer. Just remember that everything that I talk about here is just my opinion. There's no direct trade recommendations. If you'd like to read the full disclaimer, please pause the video now. So as you can see here, we had the WASDE report come out. We shocked the market here with this 90 million acre prevent plant figure, and really, just the trade was leaning bullish. Caught the trade, leaning too far bullish here, and the average of the estimates there was that 88 million acres. And the USDA came in at 90. They were still lower and stuff from the July report, last month's report. And I think the bigger shocker here, at least for me, was for the corn yield. They increased that at 169.5, up to 169.5 there, and that was up 3.5 bushels to the acre there. Largely a bearish report for corn. The soybean report was largely bullish when you look at it on paper. But it still sold off here along with the corn and wheat markets. We had soybean planted acres coming in at 76.7 million acres. That was down about 4 million acres from the average trade guess and down about 3 million acres, 3.3 million acres from last July. And the soybean yield, they left that unchanged at 48.5 bushels to the acre. And all these numbers are widely disputed just because of the wet weather and the late planting. And, with that being said here, going back to the balance sheets here, we've got the corn. This is what your balance sheet looks like, with all those acres. One thing, so we had the USDA reported 90 million acres. That obviously kept our carryouts large. Our carryouts sitting at 2.179 billion bushels, and a stocks to use ratio sitting at 15.42. That definitely could be more bullish. That's kind of a shock there because, all year there's been carryouts and stuff, down below that 2 billion bushel mark, so certainly not good in that respect. Just with soybeans there too, let me highlight that, the carryout there on soybeans is down to 755 million bushels, and that's, it's certainly not bullish, but the pile is shrinking. The pile is getting smaller here. We still got a stocks to use ratio of 18.8%. That's still not bullish, but certainly a lot better. I've seen a lot of balance sheets here with 23, 24% stocks to use ratios on soybeans there. So a couple things I want to touch on here today. The USDA came out. We had 90 million acres there. The yield, the way the USDA factored in this 169.5 yield is they used satellite data and they spoke with farmers. They did not go out there and traipse through the fields. They didn't look at ear weight. They didn't look at anything like that. So it's just a satellite reading. And they surveyed farmers. They spoke with farmers and they came up with that yield. I would expect the 169.5 yield to be reduced lower in further reports, but we'll see. I've been surprised before. So, with that being said, too, we had demand falling down. We lost 125 million bushels worth of demand. 25 million bushels was lost from ethanol. We've just been having lower ethanol margins and, negative ethanol margins for that matter. And exports as well. They've been lowered 100 million bushels in our corn exports, just because of the increased competition and stuff from South America, just from Argentina and the EU, things like that. So, stuff to look out for there. So, our demand was lowered, and it was just a largely bearish report. I don't think you could have made it a whole lot more bearish than what it was. On the soybean side of things, obviously, we were shocked with the lower acreage figures. The USDA said that Ohio and South Dakota were solely responsible for were half responsible for the lower acreage figures there. And obviously the 76.7 million acres planted there for soybeans, that was, that was a pretty good sized shock to most of the market there. And like I said before, the pile is getting smaller with your ending stocks there. But one thing to look at as well, even with, the lower demand and things like, the lower supplies, it was equally matched by lower demand. We had exports down 100 million bushels there. And the exports are at 1.775 billion bushels, and the USDA, cited the rift with the trade rift with China and the African swine fever as well here for the lower demand. So, even though the soybean supply was cut pretty dramatically, we didn't see the full brunt of that cut because demand was cut by 100 million bushels. So, and also, the FSA came out with their certified acreage and they had corn at 85.87 million acres certified, and that was along with 11.21 million prevent plant acres. Soybeans were at 74 million acres. That was along with the 4.35 million prevent plant acres. And yeah, reading into that, it looks like the FSA, obviously they're a lot lower than where the USDA is at. With that being said, those are the acres that are as of August 1st, and some of the prevent plant claims and things like that are still being processed. Obviously, this this number is going to grow. Will it grow all the way up to 80 or all the way up to 90 million acres? I would say probably not. But there is definitely room for that figure to grow up into the upper 80s. So 88, 89 million, something like that. And with that being said, though, too, the 11.2 million acre prevent plant figure that can also grow as well. And when you look at all this, and you look at where the USDA is at with their planted acres, and you couple that with the 11.2 million prevent plant, people are saying, oh, well, were the farmers really going to plant 101.2 million acres? Well, at the end of the day, some guys could have been saying that they were going to get prevent plant on corn when it really wasn't going to be corn, so we'll see. But I think, obviously, farmers were a lot more optimistic at planting corn, and they got a lot more planted than a lot of people thought. Well, according to the USDA, at least. So, and with that being said, too, we have soybeans in here, certified acres at 74 million, and that was with 4.35 million prevent plant acres as well. So that was what the WASDE had. I mean, you couldn't have really had a more bearish report than this. Everybody was leaning to the one side there. So, we had corn limit down here. Going into the charts here, we had corn limit down pretty much after the report, a couple minutes after that. And they didn't come off limit down there. On the overnight, I'm expecting this to gap down. We'll see. I guess the synthetic spreads and stuff had them down another 5 cents. So, with that being said, though, when you look at these corn, we went up and tested the 420. Obviously, we broke out of the bottom end of the range here at 405. We even broke our 395 support level. So I'd look for this 385 mark, 385 to 388. Probably heading back to test this low or this high somewhere in there, the 385 to 388 level. If we can hold that, that'd be great. I'd look for swings to, back up to the $4 mark to 403 to 405 to be a seller on corn. We're in a downtrend. You want to be a seller. And with that being said, if 385 doesn't hold, I would look for the 371 to 370 mark as your next support level there in D's corn. Going on into September, Chicago wheat here. Failed right off of that 502 level. That's the level we've been watching for the last month here. Went down through this 485 prior support level and right through the 474 prior support level as well. So I would look for, if we don't sustain a rally here, if we can't recover, I would look for a further sell-off here to 455. Not a whole lot of bullish information coming at the wheat market right now. By my count, we're still overvalued, as far as exports go, things like that. And ICAR came out. It was in Reuters this morning that ICAR came out and they, cut their Russian crop down by 500,000 metric ton, and yet, obviously the market didn't react to that. They had the WASDE to watch out for today, but there was no real rally in the wheat market before then anyway. So, with that being said, we broke support here. I would look for, if we did get a rally back, I would look for like the 477 level, maybe 480 to be a seller at. I don't know if we'll get back to this 485 mark, but certainly it doesn't look good for the wheat market. We've got a nice little downtrend going here, so short pops. On the November soybean chart here, we had the still a bearish reaction after the WASDE report, but not as bad as many people probably would have thought here. And it was a largely bullish report for the soybean market. But the market just sold off with along with corn and wheat there. So, the soybean market, it tried to rally. It was down about 7 to 8, and it tried to rally, and it was up about a half a cent shortly after the report there, but just could not sustain that. So, with that being said, though, soybean market's just kind of in a nice little dainty trading range. So we're between 873 and 895 has been the top end for now. I'd like to see a rally up to 897 to $9 to be a seller, maybe on into 910. But yeah, with that being said, though, too, I think the soybean market actually has a lot more potential to rally than corn and wheat does, just because they got a little bit of a supply bump here or supply cut, I should say, in the WASDE report. And when you look at what's been driving it, the soybean oil market has continued to rally. They added on, they got a new higher close for the day. I guess my next level that I've been looking at has been 30.30. That's been in the newsletter. That 30.30 level is the level I'm looking at as far as resistance goes for soybean oil. And soybean oils continue to rally here, so we'll see if they can get above that 30.30, see where soybeans want to go. With that being said, though, we're going to find out quick, what way soybeans want to follow. If they want to follow meal or whether or not they want to follow oil. And meal has sold off here. We've got our lowest close, in a long time here since May. So, we lost that $300 support level as well in Dees meal. So that was kind of a good psychological support level that we lost. And, we're probably heading back down to test this 295 region. And, if we break that, we'll see where we go from there. But, we'll watch the soybean market and see what they want to follow, whether they want to follow meal or oil. And, on the livestock side of things, cattle. I don't know if you guys can see this on your screen, but today we had a locked limit lower day, lockdown limit. There was a fire at a Tyson plant in Kansas, and that plant was a huge plant. They had 3,800 workers there, and they did 5 to 7% of all the U.S. weekly slaughter of cattle. So basically, all those cattle need to go somewhere else, and it's just a mess as far as demand goes. There's cash trade is expected to be poor here, and we really don't know what to do as far as like where the cattle are going to go. The ones that are supposed to be going into Kansas, they're probably going to be clogging up other slaughterhouses, things like that. So the market, obviously sold off here. Their lock limit lower, and tomorrow will be an extended limit day, so they'll have a limit of $4.50 as well there. So I guess technically reading this chart, 103.50 is support. We'll see what happens, what they want to do tomorrow. But if we continue to slide down here, I wouldn't be shocked to see this $100 level tested. So really kind of an outlier there. And we'll see what the trade wants to do. But definitely near term demand concerns. And it sounds like that plant's not going to just get back up and running by the end of the week. It sounds like it's going to be they're going to have to rebuild part of it, if not all of it. So hogs, definitely one of the nicer markets here as of late. The hog market kind of gap lower. We saw some selling to start out Monday, just along with the cattle market there. But the hog market was able to get some legs underneath it. We've seen some choppy supportive type action in here. This is exactly what you want to see when you want to be long. We got choppy supportive type action. What you don't want to see right now is a close below the 64.60 level or a close below 62, depending on your risk appetite. And, ever since we had this gap down and rally from August 5th there, it seemed like that was from the China story, them not importing any more U.S. ag goods. It seems like they've thrown everything at this market, and everything bearish had been priced in. So we'll see what happens with this little flag here. But basically, we've been seeing resistance up at the 68.50, 68.75 level, and we've gotten off that. If we do get above there, I'd look for a bit above 70, and if we do get above there, I'd look for, if we can close above 70, I'd look for a close, find a resistance at 74 to the $75 mark. So that's the way I see it. If you guys have any questions about the WASDE, I know there's a lot of data coming at you. If you guys have any questions, feel free to give me a call at 712-262-7606 with anything else. So other than that, hope you guys get a lot done today, and thank you.